Axis Bank has delivered a quarter full of fireworks. The biggest positive surprise was the strong uptick in interest margin. This, coupled with the momentum in loan growth, traction in fees, control over costs and well-contained credit cost on further improvement in asset quality, resulted in a sharp improvement in profit. While the slow pickup in deposits remains a niggling worry, it is an industry-wide challenge. But Axis may not lose out in the race given its track record of building a solid deposit franchise. The stock has run up close to 13% in the past 3 months, outperforming both the Nifty and the Bank Nifty. Now, loan growth coupled with margin expansion aided net interest income. A tight control over expenses, despite spending in technology, resulted in a moderation of the cost-to-income ratio in the second quarter. Pre-provision profit jumped 30% on a YoY basis, and the core operating profit too saw a healthy growth. Benign provision on improved asset quality resulted in a robust headline profit growth. The biggest positive surprise for the quarter was the sequential uptick in net interest margin. Factors such as waning excess liquidity in the balance sheet, higher share of domestic lending, and the overall focus on retail, mid-market and unsecured loans supported lending yields. The decline in the share of low-yielding RIDF bonds also aided the margin expansion. Going forward, we expect margins to stay in the band of 3.7 to 3.8%. The business momentum coupled with the margin expansion resulted in a solid improvement in the annualized ROA and ROE. Advances grew by 18% on a YoY basis and 4% sequentially. The domestic book also grew by 20% on a YoY basis. Corporate, which had largely taken a backseat, has picked up lately with the waning of the price war. Growth drivers have been mid-market and retail. And in retail too, higher-yielding products such as credit cards, small business loans and rural banking have picked up pace. Deposit remains an area of focus as it is lagging credit growth. In the quarter gone by, overall deposits grew by 10% YoY and remained almost flat sequentially. Retail term deposit has stagnated as it did not revise rates in line with the revision in systemic rates. It remains to be seen how the bank strikes a balance between chasing growth, garnering deposits and protecting margins. The management has reiterated that it is not in favor of chasing growth at the cost of profitability. Gross slippage to NPA nearly halved versus last year. The net slippage, including upgrades and recoveries from written-off accounts, was negative. Consequently, gross and net NPA declined further. The credit cost remained benign, although the bank stepped up the provision coverage on NPA to 80%. The minuscule restructured book and the sub-investment grade book are all extremely comfortable. The lender is adequately capitalized and would not require raising capital, at least till it completes the Citibank's retail business acquisition by the end of this fiscal. The lender's earnings growth trajectory looks strong and will be aided by improving macro and rapid market share gains. The stock trades at more than 25% discount to its peers, and there is enough headroom for a re-rating. Unexpected future disruptions due to macro uncertainty and worsening of asset quality would be the key risks for Axis Bank.